All right, folks, interest rates just rose and we're trying to figure out, are interest rates and tariffs aligned? Let me tell you the difference in the market and what you should expect. Anytime that you're seeing volatility in the market, whether it be changes, pricing, differences in opinion, they will always sometimes change and also scare investors. When investors are scared, what tends to happen? There is either a pullback, or if they're happy about what's happening, they're going to lean in. So when people hear about a higher amounts, higher costs, risk in the market, that's when you start seeing risk and adjustments happen. Interest rates have made a slight adjustment on housing when tariff information was changed. Now, I want you to think about the following. These are the three things to consider. Number one, in any market, when there is volatility, there is going to be adjustments in the market and in the interest rates, and that is due to risk. Number two, understand that real estate is a function of supply and demand. Even though that we do have an adjustment in interest rates, in values, and things that happen, understand that the market and the way that things change is tacked to how many properties in the market and what is the demand for it. And that's what we end up seeing. You know, in the Wasatch Front right now, we know that there's more inventory in the market than 1 year ago. But we also know that we're also had higher interest rates. So the demand, the want for those houses has been just a little bit less. Are there thousands of transactions happening? Absolutely. The third thing I want you to consider is that the market will always change. So you don't want to go from a short view, you want to go from a long view. What makes sense? So in considering with what may happen and what you should consider with tariffs. If we have tariffs and we have these high costs and everything ends up coming into our market, we end up seeing changes. What's going to happen? What's going to happen to our market? If people start spending more money, if we start seeing costs go higher, what does that do? Does that cause inflation? Oftentimes it does. Again, I'm telling you what I have seen from the outside and looking in. If we have seen people spending more money and we end up seeing inflation. Do you remember what happened last time? When we had high inflation, what did they do to the interest rates? They made an adjustment down. So if we're seeing volatility in the market and we're seeing interest rates rise because people are scared about the higher costs, well, if there are higher costs, what is it going to cause? It's going to cause things to go higher. And so if we have higher interest rates or we have higher people are spending more money, we may see even additional changes in the interest rates. Now, folks, we already had planned on interest rates adjusting over the next year, 2 years, 3 years. We already knew that. We knew that slowly but surely they would likely make an adjustment. My opinion is that if we do start seeing a little bit of an inflation, they're going to end up cutting those rates pretty dang quick. And you're going to end up seeing adjustments quicker than we had anticipated. So just think about the following. Are mortgage rates, interest rates, are they affected by tariffs? They are, but it's also attached to the macro economy, not micro things. Just remember that the market will always change. You understand that also supply and demand will always be a key factor in owning real estate. And I will just go back to the third thing that we kind of talked about. Look, you buy real estate and wait. You do not wait to buy real estate. It'll always go up. It'll always go down. I purchased properties right at the very worst time when we had essentially the market fell out, right? If I could put it literally when the market went just right down the bottom, I had purchased a property at the worst time you could possibly purchase it. And guess what? The market changed. I purchased property before when everybody was scared during the pandemic. Guess what? The market changed. And there's been other little micro times that I have personally purchased properties, and every single time, even though maybe it was a little volatile, in the long term, we always saw appreciation. We saw higher rates of return. We also saw higher rent rates if we were investing into properties. So don't wait, don't worry, but also be calculated. Know what the market's doing. If you have questions about the market, what it's doing, what you should maybe do as you're considering getting into a home, selling your property, buying an investment property, leasing out your home. Obviously, reach out to us. We can help you. We can tell you what we're seeing in the market and give you our recommendations of best case scenario and worst case scenario so you can make the most informed decision. Looking forward to assisting you. Best of luck.